Welcome. In this video, where can ZBCN coin go back up again? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most notable structures on the chart is a very strong support zone located just below the current price. This area is a key technical level that has previously halted downward movements in price and received strong buying reactions from investors. Especially the fact that this support level has been tested multiple times in the past and has consistently produced strong rebounds shows how solid and reliable this zone is. The fact that the price is now moving toward this level is a very positive technical development. Investors will be closely watching this area, and a potential buying reaction from here could spark a new upward movement. When examining past chart data, it's clearly evident that this support zone has played a significant role on multiple occasions. Particularly every time the price has approached this area, buyers have stepped in and the price has reversed direction, showing upward recovery. This indicates that this level is not just a temporary stopping point, but also creates a strong psychological impact in the market. There is a sense of trust among investors regarding this support zone. Therefore, as the price approaches this area again, the potential for a strong buying wave, as seen before, is quite high. Support levels are always critically important in technical analysis, as they are the zones where investors often look for opportunities to re-enter the market. Currently, the price approaching this strong support zone has caught the attention of buyers. Especially for medium and long-term investors, this support level may create new buying opportunities. While this signals that a market reversal could be starting, it also strengthens positive expectations. Moreover, this support level is backed not only by previous price reactions, but also by volume data. It has been observed that in past instances, approaching this level coincided with a significant increase in trading volume, proving that buyers stepped in forcefully. From this perspective, the price approaching this level should be seen not only as a technical development, but also as a positive signal in terms of investor psychology. A reaction supported by volume may signal not just a short-term bounce, but also the beginning of a broader upward move. Currently, the price is slowly approaching this strong support area. If it reacts similarly to previous instances, this would not only trigger a recovery from current levels, but also boost investor morale and help rebuild confidence in the market. Especially during periods of uncertainty, reactions from such strong support zones help remotivate investors. This contributes to upward momentum in price. In addition, support levels play a central role not only in technical analysis, but also in forming strategic buy-sell decisions. Professional investors and large capital funds may restructure their positions at such support points and optimize their portfolios to minimize risk. The situation currently observed represents exactly the kind of strategic importance these levels carry. As the price approaches a strong support zone, market participants' interest increases, laying the groundwork for a potential upward movement. From an investor psychology standpoint, such support zones are highly meaningful. Many investors tend to re-enter positions at these levels, recalling past price increases that began from the same zones. This leads to growing buying pressure as the price nears the area. According to the principle in technical analysis that history repeats itself, previously effective support levels are expected to work again. The current developments support this perspective, but we cannot base our analysis solely on support levels. Let's also look at other metrics. Stay tuned. One of the most exciting patterns visible on the chart is the potential formation of an inverse head and shoulders pattern. This type of structure is considered highly reliable in technical analysis and often signals the end of a downtrend and the beginning of a reversal movement. When we take a detailed look at the current price action, we can observe that the initial stages of this pattern, the left shoulder and the head, are forming, and the head section appears to be taking shape. If the price completes this formation and breaks through the resistance level known as the neckline, there is a strong potential for a significant upward movement to begin. Therefore, the development of this formation should be closely monitored, especially by medium and long-term investors. The inverse head and shoulders pattern forms in an environment where the market slowly begins to show signs of reversal, where the lows become less deep, and where buyers start to regain strength. The structure currently seen on the charts reflects this psychological transition process. Especially following recent declines, the fact that the price created a deeper low forming the head and is now attempting to recover again indicates the natural progression of this pattern. If the price experiences another decline but manages to hold above the previous low, it would signal the formation of the right shoulder, meaning the pattern is nearly complete. This also indicates that the market structure is beginning to shift entirely. The left shoulder typically forms during a temporary recovery after the first major wave of selling. Then, a stronger selling pressure creates the head. The head section is usually the deepest low and results from a period of panic in the market. However, once the price begins to recover from this area, positive signals in terms of both volume and momentum begin to emerge. This recovery is technically meaningful because buyers are starting to re-enter the market. The current price action aligns precisely with this description. During the formation of the head, investors have their eyes fixed on the neckline. If the price holds in this region and completes the formation, a strong breakout to the upside may occur. Such patterns are not only graphical structures but also represent investor psychology. The completion of the inverse head and shoulders pattern usually reflects a shift in market sentiment from extreme pessimism back to optimism. Particularly, the shallower declines and shorter pullbacks observed during the formation of the right shoulder show that buyers are regaining strength and sellers are losing influence. This signals that the downward momentum in the market is weakening and a new trend may be emerging. Therefore, closely observing price movements around these critical levels is of great importance for making investment decisions. After the formation is complete, the key level to watch is the resistance line known as the neckline. This line is formed by connecting the levels where the price previously rebounded twice and usually acts as a strong technical barrier. However, once the inverse head and shoulders pattern is completed, the price attempts to break through this line. If this resistance is breached with support from volume, the price typically responds with a rapid and strong upward movement. This breakout creates significant confidence in the market and prompts sidelined investors to open new positions. There are many examples where the price has quickly climbed to important levels in such scenarios. Another key detail is trading volume. For an inverse head and shoulders pattern to be considered valid, it is generally expected that volume will increase during the recovery following the head formation. When we take a closer look at the charts, one of the long-standing technical details that stands out is the price's ability to remain above the 200-day exponential moving average, EMA. This indicator is considered one of the most reliable tools for identifying overall market direction and trend, especially for medium and long-term investors. When an asset trades above the 200 EMA, it suggests that the overall market structure is in an uptrend, investors have long-term confidence, and the trend is continuing upward. For this reason, every day the price remains above the 200 EMA strengthens the bullish scenario, while deviations from this level should be interpreted merely as short-term corrections or healthy consolidation phases. The price had shown a strong performance by staying above this key level, the 200 EMA, for a long time. This not only reflected market participants' belief in upward movements but also served as technical support. However, recent developments show that the price has temporarily dipped below this level. At first glance, this may appear negative, but in technical analysis, such movements are perfectly normal. No uptrend moves in a straight line. Instead, it is supported by periodic corrections, tests, and consolidation phases to regain strength. This current short-term pullback can be considered a natural and even healthy development for the ongoing uptrend to continue in a sustainable manner. The 200 EMA shows us long-term trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.